Okay, it's now 5 p.m. So let's begin. First, I want to welcome everyone to our first live stream. My name is Ivo, and first I will do a short presentation, a quick overview of some of the markets like stocks, crypto, commodities, and so on. And then we will do a Q&A where I will try to answer some of your questions. Please put your questions in the chat. So, first, a bit about myself. I have been involved in the financial markets for more than 10 years, and I have been providing analysis for both retail and institutional investors. So, without further ado, let's begin the stream and jump, of course, into more details. First, I want to take a look at yields, specifically the US 10-year, because this is the market that knows it all, as they say. I want to make some key points about interest rates. So declining yields mean financial conditions are tight and vice versa. The rate at which yields move is also very important. For example, a sharp drop in yields preceded a stock market decline, the stock market decline in March 2020. Another good example is the recent sharp bounce in yields gave way to a strong sell-off in the tech sector. Overall, since the Fed came in March to basically provide liquidity to the markets, we have been experiencing higher highs and higher lows in yields, which indicates that the trend is up. I don't want to go into much detail about the pattern that is currently unfolding, but the key takeaway here is that we are overall bullish the stock market. We don't expect any major bear market, at least in 2022. A general rule is that higher yields tend to favor financials, value stocks, commodity producers, utilities. I hope I'm not missing something, but essentially this gives us potential sectors to look at that may outperform the S&P. Okay, so let's jump into first. Let's take a look at S&P futures. So the decline from the top we view as a complex correction, a WXY, a double zigzag. So with this week's sharp rally, we are starting to favor the idea that a tradable low is in. And a very near term, we look for an initial 5-wave rally to confirm the trend has reversed. So very near term, we look for an initial 5 waves up towards the 78.6% retracement of wave Y and also the upper trend line of the channel. We don't expect this trend line and this Fibonacci level to be overcome on the first attempt. So once tested, we will look for a 3-wave, a corrective decline to basically test support near 43.56 before the next impulsive decline gets underway. Ultimately, as I said earlier, we are bullish. We expect a rally to new highs. Okay, so now let's touch on gold, because gold is a very interesting market at the moment. As you know, there are tensions between Russia and Ukraine that perhaps boosted gold recently. But first, I want to start with the big picture in gold. I am tracking a developing impulse from the low in 2016. So this is GLD. This is not gold futures. This is the Spider Gold Trust. I'm using it as a proxy for gold futures because it has a much more clear pattern and it's easier to analyze. But of course, we will take a look at gold futures as well. So basically, the recent sharp rally we view as just wave one of a larger 5-wave rally that should unfold in 2022. Very near term, I believe that gold prices are tracing out a wave 2 correction that should retest the upper trend line of the triangle in the wave Y position. And this, of course, will then set the stage for a very strong rally in wave 3 as I have outlined on the chart. And ultimately, we expect gold prices to target the reverse 2.0 multiple of primary wave 4. Just to add some more details for wave 4, we view it as a complex correction, a combination where wave W is a zigzag, wave X is a flat, and of course wave Y is a triangle as indicated by the converging trend lines. Also, another thing that adds weight to this wave count is this base channel that I have drawn on the chart. So this base channel acts as strong support while wave 4 unfolded. So this is what I usually look for when tracking an impulse. The fourth wave should encounter support at or near the base channel. Okay, so as I said, we will look at gold futures as well, just to confirm the pattern that is currently unfolding. So here we have almost the same picture where we have a complex correction for wave 4 with a triangle in the wave Y position. A key thing to note here is that wave E of the triangle is a almost exact 62% of wave C, which is a common relationship in triangles. And to give you some specific targets, our initial, or should I say a strong upside target for gold futures is the reverse 1.382 multiple of intermediate wave 4, which comes in at 22.27. The next, a solid break above this level, of course, will then target likely the 2 times reverse multiple of wave 4, which comes in at 24.73. So this is our outlook for gold. Maybe another thing to note is that you know that gold has a very good relationship with negative yields, with negative real yields. So since negative real yields continue to deepen, this further adds weight to this bullish interpretation. For those who are not aware what negative real yields are, this basically means that the nominal rate, which is let me just switch to the US 10-year. As you can see, currently the nominal rate or the yield of the US 10-year yield is around 2%. And we all know that inflation is basically way higher than 2%. So the real yield is basically the nominal yield adjusted for inflation. And when the real yield is negative, this basically means that it doesn't make any sense to hold a bond at this level. So gold would provide a better hedge in this type of environment. Okay, so next on our list is the euro dollar, another major market. So the pattern here that has unfolded since early 2021 we view as a flat correction for intermediate wave 2, which should be actually in its very late stages, if not complete. A key level to note is the 78.6% retracement of intermediate wave 1, which comes in at about 1.10. So this level should be strong support on any further decline in euro dollar, and going forward we look for this entire decline in wave 2 to be fully retraced in intermediate wave 3. Also, another thing to note is that you may be aware that there is a positive correlation between gold and euro dollar. So when tracking these two markets, I like to confirm my wave counts by looking at these markets. So if we are bullish, let's say gold or silver, I would definitely need to see a bullish setup in euro dollar as well. Okay, so let's touch on Russia. As you know, geopolitical tensions continue to rise, and I want to specifically take a look at the VanEck Russia ETF. And here we have a very clear textbook quality pattern, a triangle that has been unfolding for the past 14 years. We believe that this triangle is in its very late stages, and the next big move will likely be higher, a rally to new highs in primary wave 5. However, this will likely take a few years to unfold. And of course, key support for this triangle scenario comes in at about $12. So in order for us to remain bullish on Russia, we need to see this level hold. A return back above $26 would be an initial bullish sign, and of course a solid break above trendline resistance near $33 would confirm the presence of primary wave 5. I want to also make some key points about this triangle and socionomics in general. You know, socionomics teaches us that stock market prices reflect social mood. So in essence, when prices are rising, this basically means that we have a positive social mood, and vice versa. So in the case with Russia, we had declining stock market prices for the past 14 years. And typically we get the worst type of news or social conflicts in the E wave of the triangle. A good example recently is China and the corona outbreak. So basically the outbreak occurred at the range lows of a long-term triangle that is currently unfolding in China. Okay, so before we jump to cryptos, because I believe that there are a lot of people that want to talk about crypto, I first want to take a quick look at commodities. So this is the Agricultural Investco Fund, or for short you can just say this is the food ETF. So here we also have a very interesting wave structure. Since the 2008 high, we have been in a strong downtrend. So basically this is a post GFC, the great financial crisis, where the Fed began its QE program. So this was a disinflationary and in sometimes actually very deflationary environment. So this is reflected in food prices as well. As we can see, this trend has been in play for maybe about 12 years or so. And since inflation picked up in the recent year or two, we have broken this downward sloping trend line, which basically means that the trend has reversed to the upside. And if we zoom in on the daily chart, we can see a very clear 5-wave structure from the low, which was then followed by a somewhat shallow second wave correction, and the current rally we view as the very early stages of a third wave advance. Trendline support currently comes in at about $20, so any pullbacks should be limited by $20. Overall, the focus here is higher as we look for this rally to continue higher towards $25, where intermediate wave 3 would achieve a typical 1.618 multiple of wave 1, although it can achieve an even greater multiple. So a solid break above this level will likely then target the $30 handle. And if we do a quick measurement to our second target, this implies about a 50% rally. So it sounds a bit scary, but we can expect food prices to rise up to 50% by the end of this year. So another thing to add is that you may want to take a look at some food producers and the stocks of these producers, because they should be bullish given this setup. Okay, so now let's see what's other on the list. Okay, before jumping to crypto, I finally want to take a look at the energy sector. As we mentioned, higher yields are usually bullish for commodity producers, energy producers, and so on. So this is the XLE, the Spider Energy Sector ETF. So here we also assume that prices have completed a long-term bear market labeled ABC, and recently we have broken above the upper trend line of the corrective channel that was formed. And specifically the structure from the bottom we view as a couple of ones and twos, which are now being followed by a strong rally in a third of a third impulse wave. A strong short-term target is the Fibonacci cluster into the 89 to 92 area, comprising the 2.618 multiple of wave 1 and the 1.618 extension of minor wave 1. So once this target is achieved, we expect a corrective pullback in wave 4 in red to set up for further rally in wave 5 of 3, and ultimately we should see new highs. Okay, so I think this was everything for the other markets. So now let's take a look at Bitcoin. I know many of you guys are not happy with the recent decline, but it is what it is. So the structure here, first, the big picture. I'm labeling a ongoing impulse where currently we are tracing out a complex correction for primary wave 4, where wave Y down likely needs one more decline in wave C in red for completion. So in a nutshell, we expect a drop to a new recovery low within decided zone before wave 4 bottoms out and a renewed impulsive rally to new highs begins. So a strong near-term target, actually an ideal near-term target and an ideal bottoming zone is 28,445 to 25,443. This zone is comprised of the prior fourth wave low and the 62% retracement of wave 3. Also, this zone includes the level where wave Y would achieve equality with wave W, which is a common relationship in zigzags, and also where minor wave C would equal the length of wave A, another common wave relationship. So once primary wave 4 is over, we expect Bitcoin to rally to new highs with the reverse 1.382 multiple of wave 4, a strong upside target. It comes in at 84,894. However, we believe that this level will give way to a larger rally towards our next upside target, which is the 110,000 handle. So this is what I have for Bitcoin. Maybe something to add for the internal structure for wave Y. Wave B of Y was an almost exact 62% retracement of wave A. Again, this is another common relationship for second waves. Okay, so next up is Ethereum. The setup in Ethereum is more or less the same, except that I view primary wave 4 as a flat correction where wave C down is extending, unlike Bitcoin where primary wave 4 is a double zigzag. So Here we also look for one more drop towards the prior fourth wave low and the 62% retracement of wave 3 between 1908 and 1707. So this zone is an ideal short-term target and an ideal bottoming zone. Once reached, I will then look for an initial 5-wave rally back towards the prior 4th wave high and then a corrective pullback. So this would basically confirm a trend reversal and that Ethereum is heading to new highs. Let's put some targets. Actually, I will be projecting again the reverse 1.382 multiple of wave 4 and the 2 times multiple. So our measured targets come in at 6100. So this is essentially our initial target. A solid break above this level will likely then target 80.59. Okay, so the next crypto on our list is XRP. So actually this is one of my favorite cryptos. Here we also have a very straightforward wave count. We have some overlapping here, so let me just adjust these labels. Okay, so yeah, as I said, we have a very straightforward wave count here where we have waves 1 up, 2 down, a very strong rally in primary wave 3, and then a sideways mess, a triangle, for primary wave 4. Note that the prior fourth is acted as support to the bear market from 2018 to 2020. So I believe that this triangle could be complete, but we need to see some confirming action on a smaller scale. So I'll just zoom in and let's see what patterns are unfolding. So let me just switch to arithmetic scale. So yeah, forgot to add that if we view this triangle on an arithmetic scale, wave E is almost equal to 62% of the decline in wave C. As I said, this is a common relationship in triangles. And from the low, we can count 5 waves up for wave 1 and what appears to be a simple zigzag for minor wave 2. The 78.6% retracement of wave 1 acted as support to the decline in wave 2. So to confirm the large degree triangle and ripple is complete, I need to initially see prices break the corrective channel to the upside. So this breakout would occur near 80 cents. And the next key obstacles to note are the wave 1 high near 92 cents and maybe the most important resistance is the BD trendline, which currently comes in at about $1 or so. So the takeaway here is a solid break above $1 would give us bullish evidence that the larger uptrend has resumed. So targets for primary wave 5. Let me just put an arrow. Okay, so as I said, breaking above this BD trendline would pave the way for a rally to new highs. A reasonable target for primary wave 5 is $12, which is the reverse 1.32 multiple of wave 4. Of course, if we get a solid break above here, we'll likely shift our focus higher towards higher prices, but for now I just want to focus on this level, because if we look at the other target on a log scale, it looks pretty silly. So yeah, for now let's just focus on the $12 handle. This is our target for this year. If we break above it, we will then look for other targets to explore. Okay, so let's see if we have some questions. Let me just take a quick look at the chat. So we have a question about Dogecoin. Forgot to also note that we are also reading the questions in our Facebook group, our Facebook page actually. So subscribe to our YouTube channel and like us on Facebook if you haven't already done so. So okay, so let's take a look at Doge. Okay, so yeah, basically what I see here is again a corrective decline from the top. We can make the case that we have maybe a triangle and overall maybe a complex correction, a WXY, like so. But of course, I would need to see some upside acceleration to confirm that the trend, the downtrend has ended. Actually, let's switch to a log scale. So yeah, drawing this trend line from the top and connecting the wave X high gives us a potential level to watch, which is 20 cents. So an impulsive break above 20 cents would begin to suggest that this correction is complete and the next rally to new highs is probably underway. I think we can also maybe, let's take a look. Yeah, we can make the case that we have a wedge, maybe an ending diagonal. But yeah, as I said, I would prefer to see this downward sloping trend line to be overcome before calling a tradable low in place. Okay, so let's see some other questions. Okay, so what other opportunities I see in the market? Okay, so another exciting crypto for me is XLM, where strange, the labels are not saved, but okay, we'll do this on the spot then. So what I see here is a correction for wave 2, which is in its very late stages. And again, we can make the case that we have an ending diagonal here, so a sharp reversal back above the upper trend line of this corrective channel would begin to suggest that wave 2 is complete. I will then look for wave 3 to travel 1.618 times the length of wave 1. So this would come in at about $1.41. So, but as you know, we can achieve an even greater multiple in wave 3. So yeah, this is another crypto that I'm excited for. And let's see what else. Oh, so yeah, actually here is the chart I was referring to. So yeah, this is the wave count for Stellar. So yeah, the reverse, an initial target again for this pair would be the 140 $1.40 handle, and a solid break above there will likely then target the $2 handle. Okay, so again, I want to just remind you to give us a like, subscribe to the channel, and these streams will likely be done on a weekly basis. So we plan to do them every Sunday. Give us suggestions if you have any on which markets you want me to cover in the next live stream. Of course, any comments, questions are welcome. Of course, you can also suggest a different time, because I know these live streams are being watched by many people from different time zones. So if we can adjust the time to be suitable for more viewers, we will do that. So yeah, like us on Facebook, subscribe to our YouTube channel, and we are looking again for any feedback is welcome. So this will be all for today. I'll be signing off. So again, thanks for joining the stream, and we welcome your comments and questions. Bye bye.